Hi everyone, this is Brian Neal with Tradetobefree.com, and wanted to go over some of the trades that we looked at this morning and see how they turned out, or the trading setups we were looking at as a potential entry points for a trade this morning. U.S. Steel started to move higher into the open, but it didn't quite gap enough higher, so it didn't go quite enough before the market opened to justify a trade. And in the earnings course, the earnings eruptions course, we have a minimum criteria that a stock has to gap up, and also we look at the float and other criteria as well. So, using those rules, it didn't gap up high enough and it didn't meet those criteria. So the fact that it's a steel stock, doesn't help, but U.S. Steel normally trades pretty well, so that didn't bother me that much with this trade. And again, it just didn't gap up high enough. And you could have played this little trade here between this high here pre-market, which was around 26.60, up to the pre-market highs. That could have been okay for about a 2% trade. But for day trading, I'm really looking for trades that will be very likely to move at least 3% to 5% within the first hour. And with this kind of setup, this kind of earnings beat, this kind of pre-market pattern, and the gap, it's just not real likely to make that kind of move on this trade. So we avoided this morning, didn't trade it. And same thing goes for AMD too. And this was a little bit lower price stock than we like, but again, AMD trades very well, and so we would have overlooked that. But again, it just didn't gap high enough, and it was trending lower into the open, so we didn't like that. And we can see it didn't have enough to get through the pre-market highs and trend a lot higher. So we did take a small trade. We played this little reversal pattern on AMD from here and that first pullback. I made a decent move out of the open, but that first pullback here, and when it started to recapture the VWAP here, we played a trade hoping for a move above the pre-market highs and into new highs, given they had a big revenue guidance raise. So we were hoping for the big move. And, on these type of trades, these reversal trades, especially if you don't have a very strong move, like 5-10% move initially, they might go 1-2% or something. But again, not enough for us to justify a large position. In this case, we would just, take a small position and just hope for a big move, which will happen once in a while, and then stop it near the entry point if it doesn't do that. So we're really looking for, when we look at day trades, we're looking for a big move and also a high probability trade. So if you take a lot of trades with a 60% likelihood of success with trading error and with the bid-ask spreads and slippage and so forth, you could, with commissions too especially, it's just not worth it. So we stick with the very high probability trades, and today we just didn't have it and didn't have one of those trades with the 75% or plus likelihood of success, except for EXAS, same problem, didn't gap high enough, not enough of strength. You could have played a red and green move, I guess, here. But then you've got this 5-minute candle breaking here. So do you hold it below the entry point and let it go 1-2% below your entry point? If it's not a high probability trade, I don't bother usually on those. With AMD, it had a chance of breaking through those pre-market highs and moving a lot higher, especially with the big guidance raise on sales. So, nothing really met all the criteria in the course. And so we just took a small position on a reversal trade, hoping for a big win, and we just cut it near the entry point if it doesn't do it. AAOI, so we still hold that on our swing trade. We're keeping some of those part of our position on that, and it's still going higher. It's still up a few 2-3% today, I think. It actually broke out of the prior highs and hit $100. We almost jumped in above 97.50, 98, but we saw the $100 level looming there and figured it would find resistance there. We avoided that trade as well. And the only one that really worked today was an explosive bottoming trade. And this was pretty good here. This was MKSI. They reported, and I think they raised guidance, but I don't think they beat this quarter. So it didn't really get much fanfare early on. But The bottoming pattern that we like a lot, that has a very high probability of success, was triggered with a move above 81.05 here, or 81.10, I think. And we were watching the other trades setting up this morning, so we overlooked this, and it hit the entry point and just flew. I think it went up about 5%. Let's see, $3, about 4%. About 4% hit the first target on the trade, or really close to it, within 5 minutes, I think, on that. That worked out for those that played that trade using that course, the explosive bottoming course. Yeah, so those are the ones we were looking at today. Nothing really satisfied all the criteria except for MKSI. It made a quick move. We were hoping for a follow-on move, but it didn't set up prior to 11 a.m., so we avoided the secondary entry point on that one. Okay, and I wanted to go over to the overall market. Also I wanted to show you one more too. IRBT was another one that reported a big beat, but this one gapped a lot higher after hours, or moved a lot higher after hours, and then it trended lower into the open and just sort of died into the open. And again, you could have played a reversal trade here, but in my experience, these aren't a high probability trade. 75-80%, they're not in that level, so I avoid these along with most day trading setups. But this actually is setting up a pattern though that may trigger tomorrow. If this breaks over the highs today, the highest made today, tomorrow, that would be a good entry point, and that should go 4% from that point, 3.5%, 4% from that point, fairly quickly. So that's one we'll be watching for tomorrow. And I just wanted to go over the overall market. That's one thing we do a lot in the weekly alert that comes out on Monday, and we're going to look at the market indices. What we're going to see is pretty much a continuation of the same trend. We can see the banking index actually breaking a short-term downtrend, which is good news. And let's see here. Let's put something on here that you can see. And yeah, we can still see the NASDAQ making higher highs, higher lows on a 10-minute chart. If we pull that up here, we can see that and change the size of it so you can see it. It's got a nice trend on the 10-minute chart here. Continues to make higher highs, higher lows. There's nothing wrong with that. It continues to trend higher. There's no indication right now that it's going to change in the near future. So you just keep playing the overall trend. That's good news. If you're playing continuation patterns for swing trades, for the explosive bottoming pattern, and for the earnings eruptions trade, no problems at all there. And same thing with the S&P 500. If we bring that up, it's still making the higher highs, higher lows. A little extended from the moving averages now, so it may flatten out, may pull back. We've got Facebook coming out after the bell, which could move the market. I think Amazon's coming out later this week, if not tonight, maybe tomorrow night. I forget now which. But I believe they're coming out this week. Let me double check that and see if I have that in Zacks. And tomorrow night, it's got a Zacks rank the 5 right now, so it tends to lower the numbers ahead of earnings and then try to beat those numbers. It beat by a wide margin last quarter, so that'll be interesting, even though it has a Zacks rank of 5. Yeah, so we just continue to float higher here. The VIX is very, very low. Volatility continues to be very low. Usually it starts to move higher during earnings season, but we're seeing near all-time lows on the VIX. That trend is still lower. We're still making new highs on the advanced decline line on the NYSE, which is a good sign. The other thing that's going on this week is commodities are starting to move higher and show life here. Yesterday we saw the oil price on the continuous contract make another higher high after another higher low with more volume, and probably today it's moving a little higher too. It's got this downtrend here through here. This downtrend resistance wasn't really confirmed, but we do have one here. So we may find resistance up here around 1060, 1070 on the USO. which is probably, around $50 on the continuous contract, or 51, 52. So we may be going to $51, $52 on the continuous contract for oil, and then at that point we may see resistance and another pullback at that point. So yeah, that was going on. Copper had a big move yesterday, and coal had a big move. So some of the commodities are showing life right now, but I wouldn't get too excited about them until they start getting into a really strong uptrend. I avoid commodities and commodity-related stocks unless the market's really in a strong trend in those areas. So if oil is in a real strong uptrend for a number of months, not just for a week or two, not just for a month, but for many months, ideally years. So in that kind of scenario, we'll look at oil. We'll look at oil stocks. Same thing with gold. If gold is in a very strong uptrend over the long term, not just the short term, then we'll get more interested in that, and gold stocks and silver stocks. Hopefully in the next few days, next 2-3 days, we'll see a really good earnings eruption setup. Again today, there's 2 or 3 stocks that came really close, but they just didn't have enough really before the market opened to trigger a big move higher. So hopefully we'll see one tomorrow and Thursday, or tomorrow and Friday, and then next week. And as we get, biotechs are still developing a long-term uptrend here. It's still in an ABC up pattern. The biotech index, if I bring up the IBB, you can see how well it's doing today. It's in a nice strong uptrend here over the past few months. So it's developing a new long-term uptrend, it looks like. And so we might see some really good biotech plays and other healthcare-related plays in the days ahead as well. So, and a lot of people email me about AAOI and wondering when it's going to end, when it's going to turn over. And right now we're a week from earnings. So earnings come out next Thursday night. And at this point, we're just putting a stop below the prior day's low and riding this next wave higher here, like we talked about last week. And again, we got in at the or near the double bottom breakout here, near 70 or just below 70 was a target entry point in the newsletter. So it's up, I think 35-40% right now, and we'll just continue to drag that stop up below the prior day's low on the trade, and just see when it triggers that. And after that, if we see a big earnings beat next Thursday, then we might see a great trade on Friday set up. If not, we'll look at the next continuation pattern, the next pullback, and wait for another good continuation pattern within its long-term uptrend. So stay tuned for that. All right, that's about it, guys.